Hey, happy Monday, everyone. It's July 22nd, and prices of BTC are currently at 10,488. We have what looked like a inverse head and shoulders going into the weekend right here, and we broke out of it just maybe 2 days ago, actually. And we went up, had a bit of a fake out, came back and retested the neckline as best we can. And now we're trying to move up and away from it. All right. Now, if you're not familiar with inverse head and shoulders patterns, try to just Google it, inverse head and shoulders, see it like this, and you could read about these on your own. Okay, you could go to Investopedia, chart patterns, school.stockcharts.com, and you'll get a good understanding of exactly how these patterns work and why the volume is very important when seeking out a pattern like this. Okay, so first things first, let me sort of explain you what the volume has to do with each different part of the pattern. All right, let me turn off these EMAs. Okay, so first thing is when you're looking at the left shoulder coming into the head, okay, right here, the selling needs to be intensifying all the way down, all right? And really right near the end of the head, you should mark the highest point of volume, okay? And you can see that right there on this inverse head and shoulders that happened at the beginning of July. And also you could see it right here, okay? Which is right in that area. You could see this big candle coming and marking basically the end of the head, high volume right there. And then typically what happens is the right shoulder right here, as it's forming up here, the right shoulder, the volume declines. Okay, so here's that right shoulder being created. Overall, leading from the head into the right shoulder, the volume needs to decline overall. Okay, and then after that, you typically have a volume expansion on the breakout of the neckline. Right, so you could see that the volume in this case right here, okay, you could see it goes up like this, and this bar right here associates with this candle. So you can see a volume expansion on the breakout of the neckline. Now, why is that important? If you see a candle with a wick just poking out like this, low volume, and then it comes back down, now you know that that was a fake out, okay? And that was a fake inverse head and shoulders. So for example, over here, a lot of people pointed out that, hey, here's the inverse head and shoulders coming out. Shouldn't this be a reversal? No, not really, because the volume didn't make sense, all right? You could see, look at this bar right here, okay? Really just fake volume right here, fake out, and then sell off again. None of this structure in terms of the volume added up to what I'm showing you right now for what's required of inverse head and shoulders, okay? Another, I guess a requirement, not really a necessity, could be that the neckline resistance then turns into support. So notice how over here, right, the right shoulder gets created. The right shoulder gets created right here, breaks up, comes back around, retests that same neckline as support, and then bounces off and moves away. Okay, we might be experiencing something similar right now. You see the right shoulder being created, broke up, came back down, dug in a little bit deep into that neckline, and now we're trying to create a higher low and then just keep on moving away. Okay, so the point of this chart right here that I'm trying to show you is we are looking like we have a pretty good inverse head and shoulders at play. Okay, and this is the advantage member analysis that I did on July 20th. So if you're part of this member analysis, you could have gotten into a trade in anticipation of this neckline and taken a nice, maybe 1 or 2% trade up, sold, and then, waited for, again, a retest of that neckline, right? This is the kind of information and, analysis that we provide for our community. But for the most part, what I've been really waiting on is something like this, right? Let me show you guys exactly why I've been so patient in this market. All right, so I'm going to open up the 50 and the 200, all right, on the 4-hour chart, okay? Both the 50 and the 200 were basically putting a cap on price for the last a few days actually. Every time the price tried to reach up past it, it got rejected and came back down, whether it was, the 50 right here or the 200, which is the red right there. Notice how both of these lines are converging right around the same point right now. Currently they're around, I don't know, let's just say 10,500 or 10,600 to be safe, right? See how price is being capped off right there, right? So this is really an area that has a lot of interest between the bulls and the bears, neither of which are really winning right now because prices are just honestly hovering sideways, whether it's a few percent up, a few percent down, and again a few percent up, and again pulling back a few percent down. So really what you could say is the equilibrium of this high and this low right here, we're basically stuck in the middle. All right. So what this kind of tells us is neither of the bulls or the bears have really won this region right here. Okay, they haven't quite captured it to drive the prices up higher or lower. And so what we're really waiting on is confirmation of a break to the upside or to the downside. Okay, now if we start putting up the daily chart, okay, let me show you another way this is sort of very visible in understanding why that particular 10.6 10,800 region is particularly important. Here's the 30 EMA, the 21, the 100 moving average. Here's the 50 moving average, and let's see, let me throw on, where is it, pivots right there. Okay, all right, so here's another thing. Okay, let's zoom into this chart. Let's try to figure out exactly where we are. Notice how we have not had a consecutive daily close, two consecutive daily closes above the pivot right here, which is currently around 10,700. And also notice that this entire time, right, when the 21 and the 30 EMAs, which are the black and the white EMAs, have been holding price up since beginning of April. See over here, price has been above the white or the black EMA. Even over here, hits the black 21 EMA, bounces off. Over here, hits the white 30 EMA, bounces off. Over here, it hits 21, bounces off. Again, over here, bounces off for a day, but then finally just breaks down under it. Okay, so for price to repair itself, it needs to repair itself one level at a time, right? So to capture both of these levels, right, okay, which is the 21 EMA, the 30 EMA, and even the pivot right here, 10.7, 10.8, price needs to have a nice strong daily close above this area right here. Okay, this is what will give me confidence, and maybe even if you really want to be safe, 10,800, 11,000, two consecutive daily candles that close above this pivot and above these EMAs, I would then feel a lot safer. Trading right now between this area right here is really a no man's land, and honestly I'm just going for scalps here and there because I'll either catch it low on the what I showed you earlier. If I catch it low right here, I'll probably sell at this equilibrium right here. If I catch it high right here, I'll short it back to this equilibrium. Okay, so really what I'm going through is just trading this range as best as I can. Sometimes you make mistakes, sometimes you don't, but for the most part I'm largely just sitting out. I'm waiting for the price to show me something, because remember folks, sometimes really the best position that you could be in is one with no position, meaning that you're just sitting flat, you're sitting in cash, and you're just waiting for the market to give you proper signals, proper confirmation. And the market has not given you anything, so we just wait patiently and see what lies ahead. All right, so I showed you the daily chart. I showed you exactly what the 4 hour we're looking for, which is the 50 and the 200 EMA. And even over here, I wanted to show you something really interesting. Okay, so I want to show you what a regular flat correction is, and this is something that we spoke about last week. So it's something like this. Let me look up a good example. Okay, it's probably this one right here. Okay, this is probably the best regular flat correction. All right, now I'm going to show you exactly how that looks like. All right, so it's probably on this chart over here. Okay, let me just find the chart where I am. Can't quite figure it out. Okay, there we go. All right, I'm gonna close off this pivot, and I'm gonna turn off all these EMAs and moving averages. All right, so here is sort of a example of the regular flat correction at play. All right, so notice how this is a large A right here, B, C, right? Over here it says A, B, C, right? And then we see in the A, we see 1, 2, 3, which could also be seen as, you know, an A, B, C in a larger, you know, 5-wave correction A, B, C. And that's also what you see right here. 1, 2, 3, which is A, B, C. And then 1, 2, 3 on the way up, okay? So over here, 1, 2, 3, right? And then on the final C, we see a 5-wave count, 1, 2, 3, 4, and 5 down, okay? So 1, 2, 3, 4, and 5 down. So what we're seeing is the final wave C being created of the regular flat correction. What we expect after this regular flat is a movement to the upside. Why do we say that? Even if we ignore this, you know, regular flat correction, right? Let's just say we just look at this chart, no drawing tools, no nothing, okay? All right, and let me pull this up on the daily, okay? What does this look like to you? Okay, really just ask yourself, when you look at a chart like this, right? When you see a big rise up like this, and then you see a pullback that's basically going, you know, down like a pennant, this is a larger structure of a bull flag, right, folks? Okay, it's hard to ignore that this is a bull flag, because remember, right, in a bull flag, you basically have, you know, a sideways movement like this, or sort of a flag-like movement, and we can look that up too. What does a bull flag look like? Bull flag, okay? Let's see. All right, you can even see an example like this. This is a perfect example. All right, this is the Euro US dollar. Check this out, okay? Top, lower high, low, lower low. Again, maybe another lower high, another lower low, and then boom, breaks on up. Same thing, even over here, another flag. See, you can see this is the pull flag right here. High, low. This one's a higher low, luckily, and then boom, moves on up, okay? So the point is that not all flags, okay, when they do move up like this, they don't have to look straight like this or like a pennant. There's all different shapes and sizes depending on how the market structure is doing, depending on also how you can really shake out a lot of people, how you can, you know, create liquidity by hitting a lot of stops, get people to freak out and hand over their BTC to smart money or professionals. And I would say a regular flat like this and a big sort of big bull flag, bull pennant, whatever you want to call it, created like this is the best way to get people feeling bearish. And so I've had all these comments on YouTube telling me, you know, 1 minute I'm bullish, 1 minute I'm bearish. No, all right. If you know anything about me, I'm fairly confident in exactly, you know, what I'm looking at as a overall market structure. But just because I deviate from my message in the middle of price movement, that doesn't mean my overall price movement or my, you know, goal for the next 6 months or a year has changed. All right, and the market could do whatever it's going to do in the next following months, but sometimes you do have to change. But the point is that this structure by no means has scared me away. All right, this is to me the beginning phases of a bull market. Right? Don't think, however, that I'm, you know, fully vested into the market, thinking that, you know, it's just hodl time and you just buy in and you kind of hope and pray. I'm not that kind of trader or investor. All right, folks. Hodling is not an investment strategy. Right? I love trading this market. I love investing in it because I understand the overall price movement. I understand, you know, what this market is going to do for you know, maybe a tech revolution. I understand what Bitcoin's place is in society, and I trade it based on that, you know, based on things like the fundamentals. Okay, so with that being said, you know, what we're looking at really is the regular flat that I showed you, which is a big corrective move, but it's also leading into a potential bigger move to the upside. But does that mean that I'm just, all in right here? No, not really, because yeah, you're right, I could be wrong, but I haven't been wrong in this structure. All right, I've only been hedging my bets properly just so I could collect maybe as much of Bitcoin as possible, and then ride the train back up, maybe towards 14, 16, or 20,000. Okay, that's really the end game for me, right? Being able to collect as much Bitcoin, as much as of the strong cryptos as I can to have a good payoff on my investment. Okay, so what I'm really doing right now is waiting for the market to show me good structure, to let me know that we're ready to go, we're ready to keep on moving, and it hasn't quite really done that yet. Okay, now on the weekly chart, things do look decent. Okay, let's see, I'm gonna show you guys, where is the weekly chart? Just excuse my unpreparedness for now. All right, let me show you guys this chart right here. This is the weekly that I've showed time and time again. Here's that weekly chart. Okay, so yesterday I had announced to my community that we were looking for hopefully a close above the closing of this candle right here. Okay, so yesterday the weekly closed, this one right here, and this actually looks like a very nice hammer candle. Okay, so what this kind of does is it allows us to see that we did not close lower than the previous weekly candle. Okay, so this is a slightly positive sign. It's not fully bullish, but it's also not bearish, really. All right, so this kind of gives us an idea that, all right, this is a hammer essentially on the weekly, and now the follow-up needs to be a nice bullish candle. That would basically sort of validate this hammer, this pullback on the last 2 or 3 weeks that we've seen, and then the follow-up bullish should be a nice movement up, hopefully past 11.5, 11.6. We are still waiting on a weekly to close above this 11,500 level. Why is that important? Well, because 11,500 right here is a critical level that was closed under in March or February 2018. And you can see right here, 1, 2, 3, 4 weekly candles, we have not closed above this critical level right here. That's really what we're waiting for. And if you're truly looking to get back into this market, you have no idea what you need to do or when to get back in, I would consider waiting above this 11.6, 11.7 marker on a weekly candle. Okay, this weekly right here closes next Sunday. Okay, so maybe this candle could actually close above that level. All right, so on a larger time frame, if that's what you're really waiting for, wait for a weekly candle to close above this level, because that will give you confirmation that we could potentially at least climb back towards 13.9 or even to the previous all-time high of close to 19,000 or 20,000. Okay, so you have some levels to watch, right? You have a different level to watch on the 4-hour time frame, like I showed you earlier, which was really the the 10.8 to 11,000 level. On the weekly chart, you could wait above 11,600. On the daily chart, again, 10,800, 10,000, or maybe 11,000 would be the level to wait, because the EMAs that I showed you earlier, where was it? Right here, right? All those converge right around, 10.6, 10.7. So waiting above that on a daily close or 2 consecutive daily closes would be wise, okay? So my story hasn't changed, folks. What you're really looking for in tradable markets like this is certainty. And neither myself or anyone in this space could give you that. So I don't know if you need a crystal ball or someone to whisper in your ear like Bitcoin is definitely going up or definitely going down. But if you're watching my videos consistently and you see my analysis and that's something that you expect, don't expect it. All right, it's not going to come from me. It's not going to come from my community. All right, it clearly just means that you don't understand, from the basics of how technicals work. Technicals are about understanding the aggregate behavior of the market and being able to, understand a decent structure, maybe possibilities, and then laying out probabilities for the potential price movement. There are no certainties guaranteed in this market. You know, people always like to make fun of technical analysts, like, oh, first you said it was going up and now it's going down and now you flip your view. Like, no shit, of course I'm going to flip my view. Why would I keep a steady view if the market has invalidated my structure? I'm not an idiot, right? Like, any smart person would say that if certain key levels have been broken, that would imply that the market structure has changed. So why stay bullish, or vice versa, right? So understand, you know, what you're saying before you criticize someone. All right, don't criticize someone just because they're giving you good advice to look at this market from an objective standpoint. Okay, so with that being said, you know, let me follow up, right? On this weekly, if it does close above 11.6 on the weekly chart, all right, very positive sign. If it closes a weekly below 9.6, bearish sign. Okay, definitely bearish sign. That would imply that it's closed below this weekly, and this weekly, and this weekly, and this weekly. So below 4 weekly candles, and below a critical structure that we were looking, you know, to close above for this week right here, 1, 2, 3, and once we finally broke it, you do not want to come back and break that structure. Okay, so the point is that the certainties that I could tell you is if we close above 11.6, 11.7, more than likely we're going up. If we close below 9.6 on a weekly, more than likely we're going down. Okay, again, not financial advice. Hope you don't trade off it, but I'm just telling you how I see it. All right, and I'm going to trade this market as I see it too. And I've told people over and over again that here is how I'm seeing exactly, you know, how the markets are operating. Whether it's sorry about that, not gains or views, but over here in my Bitcoin analysis channel right here that I explained to my community, every single day, every few hours, what I'm doing, or short-term positions, medium or long-term positions that I'm taking, right? I'm also actually testing out my own indicator that I'm playing with, and if you want to come join my community, it's, you know, gotten me maybe 1 or 2 trades so far that have yielded me a nice, you know, 1.5%, which is pretty nice, I would say, in the span of 2 or 3 hours. But it's not completed and it's not the best vetted indicator. So I'm still working on ironing out the kinks. But again, if you're interested in giving it a shot with me, I'm constantly trying out new things to be able to provide as much as I can for my community members. All right. Anyway, going back, here's a daily chart. This is a triple MA forecast. So really what it does is it forecasts the moving average on how it will potentially move going forward. One positive sign that I've seen on the weekly is the fact that we have closed above this 7 moving average right here. Okay. All right. I don't know how to show you this, but anyway, this is the 7 moving average right here, 7 weekly moving average. All right, this is a very positive sign, I would say. I'm pretty sure it's the 7. Oh wait, actually, I think it's just 3. I can't even tell right now. Wait a second, let me test this out. I swear it was a 7. Or maybe it's a 3. Okay, yeah, it's a 7. All right, so this is the 7 weekly moving average right here. Okay, something that has, again, held down Bitcoin or held it up since the maybe even the beginning of February right here. Look how all the candles over here closed above this 7 weekly moving average, this yellow one right here. And right now the 7 moving average on the weekly is pointing this way right here. All right, right around 10.5, 10.6. So if in the coming weeks, all right, we close above this 10.5, 10.6 level, all right, this is a positive sign. The fact that we closed it right here, again, somewhat positive sign. So at the moment, all I can really tell you folks is really in this area, there is no definitive structure, whether it's bullish or bearish. I would say it's neutral, but the fact that this is a big regular flat correction that's played out, I lean towards this moving up, okay, at some point. I don't know exactly when it's going to move up, which again is not something that technical analysts can lay out, because time is just not something that you could predict in any market. All right, that's like saying, when is Facebook stock going to be $400? It's impossible to predict. There are so many different variables to that. Same with Bitcoin, right? Things happen. Governments, ban crypto. Governments allow crypto. An ETF might be approved. BAC might be delayed. There might be another exchange hack. So, this is why overall the time prediction is so hard to determine, right? So anyway, with this regular flat, you would expect this price action to move up, and I lean towards this area to move up than down, all right? Now, I could definitely see price coming back down towards 10.3, 10.4, but then, keep on moving up. Now, you can make the argument that this is sort of a head and shoulders like this. I don't quite know the validity of that pattern because, again, head and shoulders patterns are reversal patterns. So like, I don't really know what we're reversing out of because we're already just, going down so far, and what we're really doing is about to start our new uptrend. So I wouldn't really quite say this is valid, but if you're really trying to take this as a trade and you think that we're going to go down, I would probably aim for this little area right here as a potential landing spot for this head and shoulders to play out. So anywhere between 9,800 all the way to about 10,075 or so, right? So keep that in mind, folks. Okay. Let me see what all I have to cover. So let me see on my analysis what all I stated. Oh yeah. Also, I wanted to talk about this. First, let me get to Ether, I guess. Here's Ether, also showing you on a weekly that we just printed a long-legged doji. Again, another pause, potentially reversible candlestick pattern. All right. Now you need the follow-up to that to be a nice bullish weekly. So really, whether it's Bitcoin or Ethereum, they're all looking, like they're pointed up, okay, or at least about to turn around. Right? And I personally think that's a pretty positive sign. Here's another thing that makes me a bit more positive about Ether. You can see that there's a touch right here in December, another touch right here, and then after that, we kind of created another fan trend line where the price touched, moved away, came back to this trend line, moved up and away, came back up, paused right here, and then broke down, touched the bottom trend line, and now it's getting rejected a little bit, but I wouldn't be surprised if it goes like that. Okay, back towards the high 200s and maybe low 300s. All right, now same thing that's kind of happening in Bitcoin as well. And this is where, I became a little bit more cautious to let people know that, I'm not fully confident that we're done with this correction just yet, or this retracement just yet, due to the fact that, we're still in that middle territory that showed you we're below the pivot, we're below the critical moving averages of the 21 and 30. And we're also below this trend line that Bitcoin had created from April, right here, number 1. Number 2 touch, and over here we bounced up, closed a daily above it on a hammer, and then finally it broke on through. And once we broke on through with this candle, look how we retested this as resistance, that same area. Okay, so don't be surprised, if prices pull back just a little bit and then keep on moving up. Okay, but for now, again, I remain in this uncertain position that I'm not fully confident that Bitcoin is ready to move, fully just yet. The weekly looks good. The daily looks decent. The 4-hour looks decent, but none of them are giving you signs that they're going to move up or down. All they're telling you on a 4-hour basis is, all right, we completed a nice inverse head and shoulders pattern on a 4-hour, pretty positive reversal pattern out of this big decline right here that we saw. We're still being capped by those 2 moving averages that I showed you earlier, okay, which are the 50 and the 200 right here, like these, right? Price is still being capped on the 4-hour chart, and even on the daily, I showed you price is being capped by the 21, the 30, and the daily pivot. All right. So all in all, for now, I would say if you're really looking to get back in, this is a no trade zone for me. and I would be really careful, really wary. I do, however, think that, overall, the structure still looks good, but if you want to be careful and you want to get in at a price where you're a little bit more confident, I would say that at the very least, you want to wait above 10,800 or 11,000, right? Like I showed you over here, okay? I mean, I said over here, closing above 10.6 and 10.8 is important, but closing above, 10.8 to 11 is definitely way more confidence. And then also closing above that weekly that I showed you earlier. Maybe the weekly is not here, but closing above, the 11,600 on the weekly would be a very positive sign that you could wait for. Okay. All right, folks. I hope you enjoy my analysis. Again, do be considerate and empathetic of what people are doing for you in these videos. All right, we spend time making these videos for people such as yourself, so you understand what's happening in the markets, because we want to share the knowledge, we want to share our expertise, our abilities with the communities at large. But I would really urge you to stop being ungrateful and just sitting there and commenting on YouTube or Discord or Twitter saying that you keep flipping positions up or down just because you don't understand the markets, right? Again, I'm not trying to be dismissive. I'm just saying that try to understand what people are trying to explain to you. Try to understand what people are trying to share with you in terms of the knowledge, right? We have an entire community here where I share everything that I'm doing. If you don't think that my videos are sufficient, come join so you can get every update every few hours, so you don't complain to me the day before, or I'm sorry, the day after that, hey, you said this and this happened. Well, by the time 24 hours have already passed, I would have already updated my community in here, with all my other analysis that I provide right here. Okay, so you telling me that you said this, but then something else happened, that doesn't mean anything, because 24 hours have already passed. I've already updated my community on what has already passed and what we're looking for. Okay, so folks, kind of just be careful when you criticize people, right? All right, that's it, guys. Thank you so much for watching. Come join the Cryptosomniac community. There's gonna be a Discord free lounge link. Again, the free lounge is only just these channels without the locks. All the channels with the locks are where all the fun stuff is. We're providing as much as we can for our Cryptosomniac community members, and I hope you do come join. All right, or buy my course on cryptosomniac.com right here, and you will see the course right here in the products page. Technical analysis course. Buy this and you get 7 free days in our Advantage community. All the channels with the locks, you will get 7 free days, because what this will allow you to do is buy the course, learn the technicals, and then come join and understand exactly what we're talking about, and maybe even trade with us with some of the positions that we put out. And maybe when you trade, you make some good gains, and you tell people that, hey, whatever I paid for the course or the month-long membership, I made it back, by trading with this community. All right, so that's sort of what we're looking for on, people joining us. We want the overall experience of learning technicals, understanding that when you come join us, in our community, and then trading with us, and then making back your money. And then on top of that, if you want to expand on your knowledge, go into the education section right here, and there's even more material with even more in-depth knowledge that I provide for people. All right. All right, folks, thank you so much for watching. Have a wonderful Monday, and remember to be cognizant of where you are in the crypto space. Keep your words not as harsh, and stay good, stay nice, don't be evil. Cheers.